Strat 1D is based on logic. Okay, it really is. When price reaches a demand zone, so in this case, a push to the upside, there will usually be what's called an impulse move to the downside. Okay, and we know that when there's a trending market, when we have fundamental separation, we know that this isn't an overall change in direction, but we know that this is simply an impulse or sensitivity off this zone. And what makes it sensitive? It means take profits are being reached, right? It's an area of sensitivity. SLs are being hit. Market orders are being placed. Limit orders are being placed. Stop orders are being placed. There's sensitivity off area of respect. This is why we call it a battleground. This is why we call it an area between buyers, a battle between buyers and sellers. Okay, so let's talk about the characteristics of 1D. Okay, characteristics of Strat 1D: impulse to the downside after initial contact with its zone. Okay, we have an extension, contact. What happened here? Boom, all the orders triggered, all the shit happening, and then boom, an exhaustion. Okay, or it's not exhaustion, an impulse. But this is a relatively significant change in direction. For those that are amateur traders, they would think that maybe this is an overall change in direction. We know that's not the case. We know that this is sensitivity, a reaction off a demand zone, off an area of significance. Okay, so most common during significant extensions. Okay, we really like what makes an impulse move really high probability is when there's this extension from like a trend line, for example. In this case, there's higher highs. As you can see, there was an extension, so relative significant move from its mean. Okay, so that means that also all the mean reversion strategies are coming in here. And when there's an extension, there usually means that there's an exhaustion, right? Because an extension means what? It's a push. Buy pressure broke previous high. This is a push. This can also be an exhaustion. Where is exhaustion likely to begin? At next area of significant sell pressure. In this case, because it reached a zone, we're going to call it an impulse move. And we know that there's going to be another injection of buy pressure. Okay, and it's high probability when there's an extension from its mean, from its averages, from its trend. Okay, so that's what the most common during significant extensions. Okay, price will usually make its next push after the impulse move at previous high, Fibonacci retracement, or uptrend. So what do I mean by that? Let's talk about that. Okay, so this is the same chart, lower time frame. We have the push to the upside, breaking previous high, extension from the uptrend. We have contact, and boom, a significant move to the upside. So where does price usually change direction? In this, sometimes it's at previous high, okay? Sometimes it's at its fib. Here we have our 38.2. Here we have our 50 and 61.8 fib, okay? These three lines. So sometimes we have change in direction at its fibs, and sometimes we have change in direction at its trend lines, okay? In this case, we had a full complete exhaustion to the trend line because it was a well-respected trend line. Now, we had an impulse move back to the upside. Remember, impulse moves happen at all area sensitivity. The higher the time frame, the more dramatic. So here we had a significant impulse or exhaustion back to our trend line. We had another impulse to the upside and double confirmation before another move. So our entry to the upside on Strat 1D is very multiple, meaning we require price action confirmation. So a significant pin bar or bullish engulfing candle, meaning this. We can have exhaustion that finds buy pressure at previous area sensitivity. We can have exhaustion that finds, or impulse, I should say, impulse that finds buy pressure at significant area sensitivity. We can have an impulse that finds buy pressure at its fibs. We can have an impulse that finds buy pressure at its trend lines, okay, which is what happened in this case. So it's very variable, but price action will always come in. So for example, this is a significant move to its 38.2. We know that it's still relatively far away from its trend line. So this would become invalid. Okay, boom. We have a significant bearish pin from its 50% fib, but we know that this is likely also a stop hunt. Why? Because it's not the closest fib to what? To our trend. Okay, so this is not an entry. Okay, Then we have potential entry here. This is where I'd be considering entry for a buy limit order, potentially for quick in, quick out, because we know that there's going to be buy sensitivity from fundamental support and from our trend and from our fib. So there could have been a quick in, quick out to maybe to grab a few pips here. Okay. But for our longer term move to previous high, we know that we're waiting for double confirmation due to the severity of this impulse, due to the significant strength of this impulse. And we would have done so at this bullish pin at contact, maybe even placed a buy limit order, as it wasn't a significant, it looked like there was buy sensitivity looking to enter. Okay. So multiple potential entries here for strategy one.